Having breaking news, a lot of volatility today. I think you already realized the volatility out there. It wasn't solely the fact that it was supposed to be a volatile day anyway, due to the packed economic data agenda with FOMC in less than 2 hours from now, with Canadian inflation as well. Mr. Biden is also speaking in an hour from now. So there were a lot. There were a lot in the agenda today, but as I mentioned, it wasn't that solely. We keep having reports coming out of the Ukrainian of the Russia invasion to Ukraine. So we have China involved as well. So the latest report that I have right now is that Ukraine and Russia have made significant progress towards a potential 15-point peace plan that will include a ceasefire. So I understand that this kind of positive reports. This is something that was reported from Financial Times. Uh, so this kind of reports are easing the fear of the world. And that, along with earlier, we had a report from China stating that they will support markets and their economy. So that report as well, along with this latest uh, statement about significant progress for a potential peace plan, is something that has improved in general risk appetite in the markets, and that's why ahead of the Fed, ahead of Mr. Biden's speech, we have seen stocks back in a rally, a really, really strong rally in stocks, in treasuries, otherwise bonds, and also in regards to the currency market, since we have a bit of an improvement, actually a significant improvement of risk appetite, we have seen the safe havens such as dollar eased and declining. So I will quickly share with you before I share the MT4 and to go through together your questions. Hi everyone. I don't get what your question is, Yusuf. What type of investment? Uh, I'm not sure what your clarify your question, please. So yeah, before I go through the charts, I would like to share quickly with you the calendar. Okay. Um, So the calendar is over here. So just to go through together what we have seen so far and what is expected. Okay. So we had a really, really strong inflation number out of Canada earlier, but we still have seen Canadian dollar benefiting despite the higher inflation figure. Uh, I cannot really see that over here. Let me refresh a bit. Let me just. So come on, come on, come on, come on. Yeah, here we are. So we had inflation out of Canada today, which was a very, very warm inflation number. But regardless of that, we have seen Canadian dollar being boosted against dollar. So dollar, it's to the downside. One of the weakest currencies so far today. Well, regardless of the higher inflation, we are seeing Canadian dollar sustaining gains against the greenback. So Canadian inflation rose to 5.7 in a yearly basis. So this is the highest level since 1991, August 1991. While on the flip side, the Bank of Canada inflation number, core inflation to be more precise, is at 4.8% in yearly basis, well above expectation and well above the previous reading. So what that's supposed to mean It's supposed to mean that inflation is getting hotter in Canada. So that is a clue that the Bank of Canada in its next meeting might have to proceed with further interest rates. That is something that is expected from the Fed today as well. Anyway, Mr. Powell pre-announced what will happen today, pre-announced this 25 points increase that we're gonna see in less than 4 hours. We're gonna see tonight. So if we consider the inflation of Canada, this is something that we might see, we could possibly see from Canada as well. Along with the Canadian inflation, we have seen earlier the retail sales and trail data, so imports and exports out of US as well. So retail sales, as you can see, rose at 0.3% growth at 0.3%, but that fell below expectations, well below the previous monthly reading. And while imports and exports have seen rising further. So it seems that even though we have seen the trade price data increasing, so increase in the exports, increase in the imports, however, the retail sales haven't managed to provide the same sorry, as the trade data. So this is clearly reflecting the failure of retail sales, reflecting the seasonal patterns that we used to see through the between October to February, okay, along of course with the back out of December and the Omicron headwind in December and January. So this is why this explains this decline. It's something typical. It's something. It's a seasonality that we used to see in retail sales. So, however, the number remains consistent with the 0.8% business sales gain in next month's February report. So, what else about? Okay, guys, something else as well in regards to the imports and exports. So we have said that they have beat expectations, right? So this is largely due to the steep rebound that we have seen mainly in January, in the beginning of the year, and also due to the surging commodity prices. Commodity prices, even though we have seen a pullback the last week, they have been in January and February at record highs or extremely higher. Okay, so that is something that has implies that has affected the imports and export price index. Okay, so trade prices, we have seen that since not last year, actually since 2020, we've seen these might be the biggest, the bigger upside prices that we have in exports, more precisely. So it seems that the trade prices continue to climb due to the global supply chain bottleneck, and with and this is something that was lifted anyway with the war in Ukraine as well. So this is something that's expected to continue being driven to the upside in March as well. So we have covered the data of the day. So regardless of the data, we are seeing that the geopolitics have driven the main attention. So the data is like they have been ignored a bit. So let me stop sharing over here. Let me share my screen. Here we are. So I will shift to, this is dollar index. Okay, you can see that it continues drifting lower despite the okay, the data have been mixed, right? The data have been mixed. Um, However, the expectation of the FOMC later on and the rate increase, it should support the dollar. But instead of that, we continue seeing a decline. Why is that? This is because, once again, geopolitics, the headlines out of China, US, Ukraine, Russia, etc., they have dominated the attention and all these reports that I mentioned earlier in regards to the fact that China votes to support markets and the economy, in regards to just earlier, right? Just a few minutes ago, with the breaking news stating that there from Financial Times, that there is a significant progress towards a potential 15-point peace plan that has eased the fear, that has eased a bit and improved the risk appetite. That's why we have seen stocks, and let me bring stocks in front as well. This is Dow Jones. This is the daily chart, and you can see this boost. Actually, let me put the 1 hour chart. You can see this is what happened since yesterday, okay? So the fears that demand will be heated by China's virus policies and by the Russians' invasion of Ukraine, and the fear that we might have oil supply disruption, etc. This fear have been eased after the Chinese official stated that they will support the markets and the economy, and also that positive noise that we have seen on the prospect of a compromise agreement between Russia and Ukraine. So, okay, we don't have a deal yet, right? It's just reports and reports, but these reports, so this headline, are improving the sentiment in the market, are calming down the fear of investors. And don't forget that market is all about sentiment. Positive sentiment, negative sentiment. And right now, it seems that the positive sentiment prevails, okay? Also, what else? Have I missed something? I think not. We've seen about imports, returns. Stocks are in a rally on the compromised Ukrainian talks, and China said to support the economy. So yeah, let's wait and see. The day is still long, and we might see further news coming out of the geopolitical side mainly. I had seen earlier that Mr. Zelensky also has publicly. I said it earlier. I'm not sure where is it right now, but yeah, there was also something from Mr. Zelensky. I cannot really found it right now, but. But yeah, if something else comes up, I will let you know. For now, let's go through what's going on. So I will stick with the stock markets. This is Dow Jones, USA 30, 1 hour chart. You can see that it continues extending higher, already doubled yesterday's performance. So you can see that it's already, I mean that's the next resistance can be seen at the 161 extension, Fibonacci extension, from the rally that we have seen yesterday. Sorry for that. So yeah, it's at Dow Jones over here is at 33,972. You can see that intraday. This is 1 hour daily chart. Okay, 1 hour chart, guys. Let me also keep an eye on your questions. I'm here. Hello. Oh, are expected to be bearish by GMT. Okay, guys, I cannot tell you what you can be. I can tell you what we can see from momentum perspective and from technical analysis in general. So, okay, I can really tell you what to do, what kind of position to take. But what can I tell you is from technical perspective where the momentum is. So give me a second to finish USA 30, and I'll go through your comments about dollar. And the nice question about the conference between rate hike and gold. Okay, even though, okay, so stocks. I mentioned that stocks are are surging, okay, really high, uh, extending yesterday's rally. The same stands, by the way, not solely for the US stocks, but also European stocks, DAX, FTSE, Asian stocks, and etc. Okay, so um, yeah, over here we have the example of USA 30 Dow Jones otherwise. So, and something that, by the way, has boosted as well, other than the risk appetite, the improvement of risk appetite, which weighted in bonds but boosted stocks, is also the anticipation of 25 points lift off from the Fed, right? Okay, the higher the rates are, the stronger the US economy is, the higher the more the US stocks will appreciate. Okay, so let's not forget the fundamentals. So, in regards to the 1 hour USA 30, we can see fast moving average keep pointing upwards, Bollinger Bands also expanding higher, keep pointing upwards, momentum positive as well, even though we are seeing, okay, RSI, can you see that both RSI and stochastic is turned down, but with the only difference is that stochastic keep pointing down, but RSI is pointing up. So what that's supposed to mean? It's supposed to mean that we might see in the very, very short time frame, 30 minutes chart, 15 minutes chart, some kind of a correction or consolidation, but overall it remains to the upside. Okay, so the next resistance area is at 34,193, which is the 161 Fibonacci extension. But also, guys, if I zoom out a bit, let's see. So this level, the one that I found with my Fibonacci, is also the 3rd of March peak as well. So yeah, resistance remains at that level. While, let me just put the daily. Okay, this is the daily chart. The reason why I'm putting the daily chart on is because I want you to would like to remind you, what is the extension of it? No. Oh, okay. I would like to remind you that the US 30 is moving within a channel, right? A channel that we have seen since December. So, oops. So it has managed to broken the middle line of my channel yesterday. So that was an indication, a signal, a bullish signal that it will retest the upper trend line. So the upper trend line, then another resistance area can be seen at 34,280. So okay, so we have seen two immediate resistance levels so far. So we mentioned that the 161.8, so that's also the peak that we have seen in the 3rd of March, but also the 34,286, which is the up trend line of this nearly 3 months channel. Okay, so this could be used as these are the immediate resistance levels for Dow Jones. To the flip side right now, okay, to the flip side, other than the bottom of the last few sessions over here, the next support level for the asset is down here to the 20 period moving average. So intraday, you are very short, immediate support level is 33,650. A break of that level could get back the Dow Jones to the 33,340 or even lower. So let's wait and see. Okay. So now, right now, I'm shifting to dollar to explain a bit your questions in regards to what we should expect for the Fed. So guys, So far, we have seen that it has. So let me clear a bit this mess first of all. So we are seeing a decline since yesterday from the dollar, right? Right? Decline. This is the hourly chart. Okay, let's not forget that. And I have some people questioning whether they should be bullish or bearish ahead of the Fed or during the Fed announcement. So, guys, okay, so are expecting dollar to be bearish. Let's get the bull dollar today later. Um, Anyone else about dollars? So, guys, first of all, we keep repeating with Stuart that you should be very, very, very careful if you're trading the news, okay? So obviously I cannot tell you what to do. I will try to give you some resistance and support levels in order to help you identify any breakout either to the upside or to the downside, okay? But have in mind that if you try or if you want to trade the news, so to open a position during the announcement, be careful that because there will be a really, really, really high volatility on that time, on that period, on that exact moment, that it could easily kick your stop loss and etc. So risk management, set appropriate levels, set up do up risk management before, set a risk and reward ratios before. So do whatever we keep saying, we keep saying about risk management before opening position, because it's a very, very volatile event. So now what we're seeing, actually what we're expecting, as I said earlier, we are expecting a 25 points increase, but the thing is that this increase is something that was pre-announced since the previous meeting. So it has already, the market, it seems that it has already priced in the interest rate hike of 25%, because it's something that Powell clearly said in his last meeting, in his previous meeting, that, you know what, guys, we're gonna proceed with a rate hike to 25% in March. So he clearly said that. That's why dollar was to the upside since then, because other than the fact that it's a safe haven, also the anticipation of this 25 points rate hike that we're going to see today, they held it to the upside, so it has already priced in. Now that might be also reason why we're seeing it reverting to the downside ahead of the Fed, because it's something that it was already priced in. So of course, I will start with the overall trend, okay? Daily, weekly. This is the weekly. Is keep improving and improving since April last year. And why is that? Because Fed has clearly stated and is expected to proceed with more aggressive stance. So we don't really only expect the 25 points today. We are actually, the markets is really anticipate 100 points by July. So another 75 after today's rates. So this is something. So what that means, the higher the interest rates are, the more the stronger the currency of the country will be. Okay, so the overall, that's why the overall outlook of dollar remains positive. Okay, so we can see, if I zoom out a bit, we can see that it reached levels that we haven't seen since May 2020. So the next resistance area for dollar is 100, the 100 level, the 145, and if that area breaks, then it will take us to the 103 territory. Okay, so this is the overall outlook. You can see that momentum is strong. We had some corrections, a bit of a pullback, but remains well above zero, increasing. Stochastic the same, RSI the same. You can see, but Andrea, RSI looks a bit dodgy, is not above 17, etc. Yes, it might not be above 70, but if I connect the lows, I can see a continuous increase. So overall outlook, medium term and long term outlook remains positive for a dollar. So this is the a medium term picture, guys. So only a only a move back below 97 level could question the overall outlook for dollar. Okay, now I know that you might not be interested in the long term, so that's why I'm taking down to the 1 hour chart. So we have seen it failing since yesterday to break the 99.15 level. Okay, so actually since yesterday, so since to be precise, since Monday, it has been in some kind of a ranging market, consolidating, while it broken the low level of the low area of the week, broken it earlier and consolidating since then the last 4 hours around this low level, but the intraday the outlook is negative because the momentum is negative, so we are seeing a continuous decline, falling below 20 period moving average, 50 period moving average, 10, 9, extending Bollinger's to the downside, MACD short-term MACD extending lower, okay, and RSI failing to get back above 50. But okay, so stochastic, however, is rising. So this actually looks in line with the price action. If we consider that is managed for 4 hours in a row to sustain close to the 90 to the 98.60 territory, but the majority, if I will shift further down to the 30-minute chart, we can see that is keep moving lower. We have some kind of an intraday, very, very short-term corrections, but they seem like just corrections because if this is days, this is since yesterday's performance, guys. You can see that is keep moving lower. Okay. Oops. And here it is so far. Down, 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 up, down, 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 appreciated, then turn back down again. Trying to recover right now, but remains below the 95.60. Momentum is negative. Stochastic turn down again. RSI hold below 50 level and close to the overbought barrier, sold barrier. So momentum remains negative in the very short time frame. Uh, so, so, okay, obviously depending on, I will stick to the 1 hour chart, okay? Over here, we are seeing a repetition. Can you see this repetition? So a repetition at the 98.66. I will shift it a bit higher. We'll make it around 98.70, okay? Because it keeps failing to go above this level. So these, okay, actually was 98.66. So I put it, I rounded up to 98.70. See, this is our immediate resistance level because on the breakout of that level, okay, we could see the asset appreciate and returning back to 98, 90 level, 98, 90, or even reverting completely and getting back to retest again the 99 level. So these green lines that I'm putting over here is our immediate resistance level, our intraday resistance levels. Now, to the flip side, to the downside, this is the 1 hour chart, I remind you, okay? To the downside now, the very, 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 actually, a closure of this candle below 98.34, okay, could extend losses to the downside. So this is our latest low fractal, 98.34. So a breakdown, a closure of the hourly candle below that level could open the doors to last week's losses. So I'm gonna put as well, sorry guys, I'm gonna put as well my Fibonacci extension. Have I put it correctly? Yeah, I did. So indeed, this looks to be a nice support level. It's also very close to my Fibonacci extension. Okay. And have another one over here, 95, 94. Obviously, it's the 98 round number level. So 98, another support level for the asset. Okay. So I'm going to get rid of that just to simplify a bit of this mess. Okay, so let me change the color as well to green yellow. And let me check something as well. Yeah. Yeah, that's nice. Okay. So that's the third support level that I have put a 95,760. Coincides with the 20-day moving average, but also with the low fractal that we have in the daily basis. So 3 resistance levels, 3 support levels. Can you see that what I have done? 3 resistance levels for the day, 3 support levels for the day. So on the breakout of these levels, you can identify the next resistance and support levels, because a breach and break of 98.70 could retest 98.90 level, while on the breakout of that we could see turning back up again and retesting this double top over here at 99.15. While if the negative momentum continues, which is what we are seeing right now, okay, mainly driven by bearish bias with momentum indicator, so with fast moving average pointing down, Bollinger's expanding lower, MACD negative, RSI shows some kind of an improvement, but it's still below 50, and this slope is not really sharp, so it's quite weak. The same stands for RSI, so everything points to the downside with the next immediate support level 98.30, while on the breakout of it, the next resistance, the next support level is down to the round 98 level. Okay, so this is for dollar. Hopefully, I help you guys. Jumping all over the place, maybe because I'm changing time frame all the time or something. Not sure why is that, dear Keith. Sorry. Beginner, welcome. Buenos dias, Lalo. I'm new here. I want to understand everything. Let me know if you don't understand something, Beno. I will try to do. I will do my best to help you. Okay. So I'm getting back to your questions. So I replied to Samuel, and I think so. Let me know whether my reply satisfied you, dear. And now let's get back to, welcome from India, Forex trader. So dollar yen, of course, dollar yen. So what is about dollar yen? It was a lot of consolidation because of the risk on, risk off conditions. So this is the hourly chart, guys. Okay, this is the hourly chart. So far today is consolidating. That's clear, I think. If I zoom in, you can clearly see the consolidation. It's because of the on and off of the time, and we don't really have a clear direction, and that is still the case. So that's why the high of the day and the low of the day remain our resistance and support level. Only on the breakout of those two barriers we can actually clarify the direction of dollar yen. So obviously a break of that level, a closure below 118.16 could retest the lows that we have seen yesterday, while on the breakout to the upside 11840, then okay, then we need to search for new resistance levels. So okay, that's not helpful. So okay, so on the breakout, actually, sorry for that. Depends on your time frame. Let's go to the 15 minutes chart. Ooh, that's a bit messy. 30 minutes chart. I've applied a Fibonacci expansion. So the breakout one of 11840, then another 10 pips higher, 11850, the next resistance level, and the 11870, the very next resistance level, if we have a decisive breakout of 11840. So anyway, we can see that the overall trend of dollar again is to the upside, is positive. It looks overbought, to be honest, but we don't have a sign of a pullback yet. So it has been in a sharp rally for 8 days in a row. So in order to see a reversal, we need to see the asset. So we need to see the asset actually turning back down, more precisely below the 117 territory. That will alert the reversal of the trend down to 115. But for the time being, the trend remains strong to the upside, consecutive positive rallies. Momentum, okay, it has eased a bit intraday, but remains positive. In the medium term, is still well positive. Intraday consolidating. So what you have to do is keep an eye on those two barriers until this mess is clear. Okay. Now, if you're trading a 30 minutes chart, the same stance, we can see that retesting the upper level and then reversal. So on every reversal, it is expected to retest again the down barrier. On a rebound, on the rebound condition, is expected to retest the upper trend line, and so on and so forth. Okay. Remember that ranging market is still tradable, depending on you. Okay. Gold. I haven't missed the question, right? No, I haven't. Okay, cool. Let's shift to gold. So, gold. Okay, so what's going on? I think this is what you're asking me, dear Deniso. Okay. Okay. Gold is a safe haven, right? It has appreciated significantly due to the war, due to the fear of supply disruption, and as a safe haven, it has the people during the times of uncertainty are shifting money to gold because it has a stable value, right? It's an asset, it's a precious metal, and etc. But is a sensitive asset, inflation sensitive asset. So what that's supposed to mean is something that we have covered in the past as well. So gold is a proven long term hedge against inflation. Okay, sorry for that. So theoretically, if remember, gold is considered as an international currency asset, I could say. So in if we are facing conditions in which there is an increasing inflation, Okay, that implies that there is a deduction in the purchase power, right? So this is leading investors to drive down their proportion of cash and invest into gold, right? That's why we have seen gold appreciating. But what is the tool for controlling high inflation? The tool is interest rates, right? So, so the one thing that you should remember is gold is inflation sensitive. So the higher the inflation is, the more the gold will appreciate. But it's also sensitive on policies as well. So if the central banks apply, in order to control inflation, apply measures such as the increase of interest rates, okay, that means this is what will happen today, what we are expecting to happen today from Fed. Fed's expected to proceed with 25 points rate hike. So remember that rate hike, an aggressive policy, imply to economic growth and appreciation of countries' currencies. So in this case, is appreciation of dollar. So gold is a dollarized asset, it's a dollar cross. That's why we're seeing down on the anticipation, on the pricing in of an aggressive Fed of 25 points today and another 75 points by July. That's why gold is under pressure. If the war, if we didn't have the war, okay, if we didn't have the war, actually the outlook of gold was negative this year for the whole 2022, exactly because we're expecting for the Fed to add some measures and from the central banks to proceed with aggressive policy with interest rate hikes. The only reason why gold has seen all this rally this year, it was the war and the fear of supply disruption. So as soon as we still started seeing some kind of positive development from the talks and etc., things have eased down and markets have started shifting their attention to the central banks. And this is what is explaining this decline since last week on gold. And actually gold broken, as you can see, a 20-day moving average, and is down to 1904. So it's just a breath away from the 1900s territory, key round number. And actually, to be precise, it has already breached and broken the 50% of this rally. So it has turned down. It has turned into a negative bias with the next immediate support level at 1889. So it has already reversed more than 50% of the rally that we have seen the whole year. Next support is at 61.8% level. So that's significant because it's whether once it touches that level, we're gonna see whether it will continue moving down and things have eased and etc., or whether this will react as a key retracement level and we'll see asset rebounding again. For the time being, the gold outlook remains positive, but it's in a doubt. It's positive to neutral exactly because it has already reverted 50% of the rally and it remains below that level. Okay, so positive outlook is neutral for the time being, while sorry why yes, rate hikes depreciate gold, by the way. Okay, what else I wanted to mention about gold? What was it? So yeah, we have seen it well below the 2000 highs, right? To the that 1, 2, 3, 4, 5, 6 days in a row to the downside. So this is clear that what we are seeing over here is traders positioning for the 25 points lift, okay? So, and on the possible hawkish message from the Fed, and this the fact that risk appetite improved, so people took out the money from gold and moved it elsewhere. Or it might be also a combination of profit taking as well on this 270 high. So it's traded at 1913. Support level lies on 1889. Intraday support level in the meantime lies down to the bottom of the day, which is down to 1902, but also the round 19,000 level. So 19,000 level is the immediate support level for gold. But yeah, intraday, even though we've seen some kind of an easing, the intraday outlook remains negative. So a breach, and break of the 1900 levels could open the doors to another $11 lower, while on the break of that level as well, then the next support level comes down to, come on, comes down to the previous up fractal, which coincides with my daily Bollingers and the 1850 level. So what else? What is the sign of gold in MT5? We already covered that. Guys, by the way, I'm nearly to the end of this session. I will reply to Japthan about the dollar yen. So if you have any more assets that you want me to cover, now is the time, okay, to do that, please. Je suis depuis Senegal. Oh dear, I haven't. Um, uh, so I don't speak French. Uh, Even though I try to learn, so I'm not sure what you are telling me. So, Aussie yen. Reminder, now is the time for further questions, otherwise I will call it a date, okay? So, Aussie yen. Let's find Aussie yen. Aussie yen, Aussie yen, Aussie yen. Come on, come on, come on. Sorry about that. It should be somewhere. Here we are. Okay, Aussie yen. Thank you, Aldo. Wake up. Oh, good morning. It's morning over there. Good morning. Welcome. So Aussie yen is a very sensitive, risk sensitive asset. But I would like to start with the daily chart because it has been for nearly a week now to the highest level, to the 1 year high territory. So we are back to 2021 territory. And not only, actually, if I put the weekly chart on, could be more, you can see this is the weekly chart. Obviously is long term, but we have seen the asset sustaining gains at the year's highs. And the reason why I wanted to show you the weekly chart, because we have seen some kind of here of not really sure, it looks like an inverse head and shoulders, or maybe nope, an inverse head and shoulders, uh, or I don't know, or maybe like an ascending triangle, if I correct those. So yeah. Oh, sorry. Oh, wrong. Yeah, we are seeing like connecting highs, higher highs actually. So there is an overall bullish bias, a bullish trend to the long term. But okay, that's the weekly chart. In daily chart, also a big rally has been seen since the beginning of the year as well. Uh, you can see a very aggressive rally holding about the 20-day moving average. And actually, it doesn't look to run out of steam. Can you see that? So keep rising and rising, higher highs, higher lows, well above 20 period moving average, expanded Bollingers to the upside, momentum strong, RSI also rising, slowly, but rising. Can you see that? You see this connected, being connected. So we have an overall strong Aussie yen trend, which doesn't look to run out of steam. So the next the resistance level for the asset is the edge of the trend line. So 986.34. While in order to find the very next resistance level, I have to put the monthly chart on. And as far as I can see, the 87.76 is another medium term resistance for the asset if it managed to break that 86.40 territory. So 86.40 might be the edge, the upper level of my trend line of my channel, but it's also the last July's peak. Okay, so this is a very important resistance level. But yeah, that's in the long term. Let's leave it for now. Let's shift to the 1 hour chart. Let's get rid of a bit of these colors. So make it simplify it a bit. 1 hour chart, up, correction, fast moving average pointing to the right hand side. So that implies consolidation, but momentum remains positive. So this decline, along with the decline in stochastic, looks to be just a temporary one. Okay. So that looks to be a correction because it was overbought. Okay. So immediate support level 85.70 is the last two lows, and my 9 exponential moving average. Immediate resistance is at the peak 86 round number, while this looks like a limited pullback because of the overbought conditions. We can see MACD's getting higher, RSI is at 70, stochastic slowed down a bit, but looks to be as a correction, as I already mentioned. So intraday, in order to suggest that this rally that we have seen since yesterday, it will come under pressure, we need to see a breakdown of 85.70 and more precisely a breach of 85.50 territory in order to believe that this rally will revert to the downside and will reversal. So overall, Aussie yen is in a positive outlook intraday and in the medium term as well. And last but not least, dollar CAD. Dollar benefited on the so here is dollar CAD. So let me check something. Okay. Dollar CAD. Ooh, a lot of. I'll stick to the intraday basis. Okay, this is the intraday 1 hour chart. This is dollar CAD. As we can see over here, it has dipped down to 2 weeks low territory following the data as well. But we have seen some kind of a rebound the last 2 hours, but still below the 20 period moving average. This is intraday, guys. So it bounced to 127.30 because also it might be on the anticipation of the Fed or something. But as long as we don't see a bullish cross of the 5 and 9 exponential moving average and a breakout move above this 20-day moving average, the 20 period moving average, the asset remains negative. So is this rebound limited? Is it the start of a reversal? In order to figure out, you need to be a bit patient to see whether it will break this 20 period moving average and whether we're gonna have a confirmed bullish cross of this 5 and 9 exponential moving average. So if this happens, then the next resistance area for the asset comes to the Bollingers and the round 28 level. So it comes over here. Up here is the next resistance level. If we see a bullish cross of the fast moving average along with the breakout of the 20 period moving average at 127.40. But from technical perspective, this looks to be limited rebound. If we consider the MACD is extremely negative, RSI is below 50, and the only one that implies to a rebound is stochastic. But let's wait and see. Is it a limited rebound? Is it not? In any case, this is our immediate resistance level, which if it breaks, it will bring to attention the 127.90 and then 128 level. So let's wait and see. But we need a confirmed breakout, guys, okay? I don't mean that it will touch and break it. We need to wait the candle to close, for the hourly candle to close, to see whether it will close above this level or not, okay? So that was pretty much from me, guys. Overall, dollar CAD remains in a downwards trajectory since the beginning, since last week. So in order to revert these losses, we need to see it. This is something that we might interested in for the week ahead. So we need to see it above the 128 level in the daily basis. So let's wait and see. So yeah, let's see. So that was it from me, guys. I ran out of steam. I need to go. So a lot of volatility is still expected out of the politics and out of the Mr. Biden speech in 25 minutes and the FOMC at 6 o'clock GMT. So take care, okay? Take care. It's a lot of things could happen. Focus is on the conference as well, so don't ignore conference. It's 30 minutes after the FOMC, but is where the majority of the market focus on. Okay, the conference is more important than the decision, than the rate decision, because the question and answer session in the conference will give us clues on what to expect for the remainder of 2022 and the remainder of 2023 as well. So it's very, very important to actually the conference could be so that at 6:30 GMT it might be a very, very volatile session, because we're gonna see what they expect for the remainder of the year and the next year, but also we're gonna see their views in regards to the concerns around the war in Ukraine, whether it will continue and etc. Okay, so thank you very much, guys, for attending. Hopefully, I help you. Have a great day ahead. Take care and see you again tomorrow. See you. Bye bye.